All right, what's going on, everybody? Uh, First stream of the year. Unfortunately, I still do not have my new computer. I'm tracking it now. It's saying January 9th, so that kind of stinks. So I'm still dealing with a little bit of a slow setup here, but I recently cleared out a lot of the storage and stuff on here anyways, so hopefully it's a little better than what it's been. Really, the only problem is when I'm trying to flick back and forth between some names, it takes longer than I would like. It's not as seamless, but anyways, obviously start off the market, this year at least, it's been pretty piss poor. Something that was kind of anticipated. So if you go back to the last live stream I did of 2023, the first thing that I had mentioned and the biggest thing for me, or most important thing for me, was that following us getting into that weekly untouched bearish imbalance, which I'm going to show you here shortly as I share my screen. We talked about it. It was the first attempt up at that bearish fair value gap dating all the way back to 2022. So it really would, it makes sense for it to retrace the way that it did. And something that I mentioned in that video is I would prefer that price got back down into previous buy side liquidity, which is right here. And from this point, this is where I kind of want to see us lift off. So from the weekly perspective, you'll notice that we're not even close to 50% of the range. And I still don't really anticipate us retracing to 50% of our weekly range just yet. I think that all-time high is coming, but on the daily perspective, I should say, if you take a look here and you'll see we are now deep into discount on our daily price run. And you might say, why does it look different than what it would have, on a weekly chart? And really, in short, if we were to draw it from, what was the price run that took out these highs right here, and specifically this high, which dates all the way back to, what is this? The July 19th summer high of last year. So that was really the high that we were looking at. But what was the price run that took that out? So when I mean price run, I mean, consecutive green candle run that took out that, right? So if I go from here, and you'll notice we get our red candle here, but despite all of this, you'll notice as we continuously move forward, we never got any retracement down to 50%. And anybody who is in the group or has been watching my videos on YouTube, you'll know that until I get that 50% retracement, oftentimes I don't want to chase price up there. Could price continue to move higher? Absolutely. I'm not saying that it can't, but for me, and what would make the most sense for my own personal, risk criteria, I want to see it get into discount of the range, which would in this case be below 50%. Think of it. If the range is made up of 100, right, the number 100, and you're buying something at 50%, essentially what your risk reward there would be is 50% to the upside and 50% to the downside. But if I can get an entry in discount, right, so below 50%, and at this point specifically, right, we did bounce off this 62% just a bit today, realistically from the gap up that we just had in futures. Um, but if we look at it from that perspective, my upside is 62% of this range, while my downside is 38% of this range, right? Now, from that point, I want to look and ask myself, what would be a likely point or a point that would make sense for us to bounce at this exact spot, right? And something that I've identified previously, of course, in that blue line that we just saw, and we date back all the way over to our summer high. I want to see previous buy side liquidity act as support after we finally broke through it, a couple weeks back. For people who do not use the methods that I use, this is essentially a, support or resistance turn support flip, right? Not something that I, typically would look at unless there's some sort of imbalance there that would make sense of it. And there's your imbalance there as well. So right now we're kind of hanging out for dear life. So if there's going to be a spot to bounce, this makes a lot of sense to me. I had put this down, this little, hypothetical price run. I put that down the other day and tweeted about it. This is something that I was just anticipating happening, and we'll kind of see how it goes. Now, one more thing, and this is a concept that I don't use all that much, but something that really comes to mind, especially on a week like this. So, the concept of TGIF, we would I guess, anticipate what could be a pretty decent retracement on this weekly candle so that it doesn't finish in this type of situation here. Could it still finish this way? Absolutely. Just something that could be at play. Um, but one more thing covering the overall market, and then obviously I want to get into some more individual names. But let's look at DXY, which is the dollar index. And if you don't use it, to me, it is the best indicator. You don't need any of these lines, trend lines, moving averages, anything like that. To have an understanding of how DXY works and being able to plot, just pure price action and find imbalances in price. To me, there's nothing better than that. And dollar is an excellent indicator. Um, when trading the indices, or even specifically like bigger names in the indices, like for example, if we're talking about, I use the dollar when I trade NQ, right? Let's look at some big names that are a part of the NASDAQ, right? You can look at Apple, you can look at Microsoft, you can look at, there's so many names that will correlate to this as well. And that's why I think it's important. Now, you might say, okay, well, if it's just a perfect mirror image, then who cares, right? Why does it matter? Well, to me, I would tell you that while NASDAQ is also creating its own individual levels, the dollar's doing the same thing. And oftentimes, when you have them line up the way that we have in this current situation, where we have a bearish imbalance right here, we have an overarching bearish trend. We got to 50% of it, set our range, and so far so good to the downside. This is really ultimately where I think we go on the dollar, 99.57. And does it line up well with what I have currently on NASDAQ? And to me, it does. So there are a couple things that are correlating and working in the right direction. Obviously, we have non-farm payroll in the morning, which is tends to be a hectic, high-impact data driver. So that's something that obviously will take place prior to the market opening. But I do anticipate a bounce. Could I be wrong? Yeah, I've been wrong before, but just using my own current data to drive my thesis moving forward. So so that's really what I have on the dollar for right now. So that's just overall indices at this point. So now I want to open it up, and this is going to be mostly about just straight up charting. We'll go through some names. Hopefully there are some names that I don't already have charted, so that we can go through them together and you guys can learn a little bit about how I do it. If you're interested in that. Not everybody's always interested in that. So SB options, yeah, absolutely. We can go over Tesla now. So as always, I'm going to timestamp this, so anybody who watches later, they will be able to see. And okay, so we're at about 10 minutes right now. Okay, so let me pull up Tesla. Tesla is a name that I still am in, and I still like it, and I'll explain to you why. Oh, cool, good. We're getting some requests. That's awesome. Yeah, so Crocs we could definitely do, and Neo for sure. So let's just start off with. Let's look at Tesla. First, let's look at the weekly, and then we'll go to the daily. I have both of these charted, so it should be pretty quick. But here we go. Okay, so here's Tesla. Here we go. All right, so looking at Tesla, as we have been for a while now, and it's a name that I've liked for quite some time. I think it really dates back to these November lows. If you were to go back and just do at MandoTrading with the $ TSLA, you'll see all of the analysis that I've done on it over the last couple of weeks. But yeah, so really, to me, not much has changed. We ran into this bearish imbalance for the second time, filled it off the first look. Second look, we're still rejecting off of just to start now. We have this bullish volume imbalance, and this is where we caught, I believe it was 2 days ago, not today. Yeah, it was yesterday. So yesterday we caught up into the weekly bullish volume imbalance for the third time. Really, that's an area that I would like for price to hold, and I'll show you on the daily, and we'll crunch it down even a little bit more, to be a little more precise. So again, I use the highest time frame, like the weekly. I know a lot of people don't even think to look at the monthly, weekly, even the yearly. Like they don't look at anything like that. And while I'm sure you can do just fine without looking at it, I think it's a lot of beneficial information that you can use. And to me, the weekly time frame really sets the stage for my overall bias on a specific name. Now, and then as I move down, I look into an hourly chart, for example, as my just overall what's my market structure in this current situation, and then as I go down onto really, I've been using the 15-minute a little more than I had in the past, just realistically over the last probably really since after Thanksgiving, price action's been a little bit more sloppy, so I've been going off of the 15-minute time frame. It's been a bit more clearer. But if you were to look at, say, a weekly chart, you're going to notice that weekly chart is so clean, so beautiful. And as you crunch down in time frames, it usually gets a little bit more sloppy. So I use that higher time frame as a way to kind of give me some sort of directional bias that I can follow, and then I crunch it down into a smaller time frame to really pinpoint what my entry would be in a particular situation, right? Um, so let me just go over here to Tesla on the daily, and we'll see. We're kind of holding on for dear life here. We've closed below a bullish imbalance, but we have not disconnected from it yet. I'm sorry, tomorrow could be the day, but I don't really anticipate that happening. Um, so here's our current structure on the Tesla daily. Reason why I have my fib set the way I do. What was the price when that took out this high here? We go from this low up to that high. You'll notice that if I bring this right over down into here, on this red candle to the downside, you'll notice we never got to 50%. So to me, if we do not retrace back to 50%, the range ain't set. So we can continue on. And until we get that retracement back to 50%, at this point, I feel as if the range is set. And to me, the risk reward to the upside is much greater. We do have a couple bearish imbalances here. I actually haven't charted a few of these out, which I should throw on. But if we have a bullish structure like we do, I wouldn't anticipate these causing all that much trouble. Don't really love the gap down, to be honest. But to me, as long as we're hanging on to this volume imbalance higher, I'm really not all that worried. Any disconnect from that bullish fair value gap right here, and I'm going to call it quits on what I have. So, just kind of using that as my, roadmap, I guess you could say. Here's another imbalance that, we've already got into multiple times, but, again, at this point where I'm at and where I'm currently at, I'm good if we were to disconnect from this and I lose it, but I don't think that's going to happen. I think we will get a bounce higher from this point. So that's Tesla. All right, so let's look at Crocs. Okay, I definitely don't have this one charted, so that is a good thing. We can do that one together. So again, I'll start with the weekly, and we'll work our way down if it warrants itself to do so. I hate the shoes. I don't know about you guys, but I definitely hate the shoes. All right, so let's zoom out a little bit and see where we are. Okay, so off of our all-time high this has got to be all-time highs. Okay, so let's just zoom in. So right off the bat, the first thing that I like to identify is just our buy side and sell side liquidity. So how do we identify those? We look for swing highs and swing lows and just use logic to kind of back our idea. So what I mean by that, what had to have happened at that point, right? People had to start selling, right? What had to have happened at that point? People had to be buyers, right? We can use what we have to the left as a little bit of a compass to decipher where we think is the likely draw on liquidity, right? But so from this point here, just right off the bat, if we look at a much higher or larger time horizon on this name, you'll notice that with the takeout of that low right there, not only do we have a bearish structure, we also have a bearish breaker. So let me draw this. So from that high down to our low, you'll notice right here, we have a bearish breaker, this candle here, and we also have multiple bearish imbalances, okay? So if you use my model, which is on YouTube, or if you've seen it, or or just have any understanding of it, this is literally my model right here. So we look from high too low. We get our retracement back up into our discount bearish imbalance, and then we look for a flush to the lows. So that would be uh, pretty bad for in terms of Crocs if my model were to complete at this time. Now that's just a higher time frame, a larger time horizon type of analysis. But if we were to go in and be even a little bit more close-minded on this, and we notice, okay, initial price run here, what was the one that took out this high? Is not quite. It's really this price run here. So if we're to look at that, ready here, because we also have to understand that overall and over time the market is it's rigged to the upside. So let's see. Okay, I'm just waiting to see when we get a 50% retracement. Beautiful. Okay, so here's our 50% retracement, right, off of this most immediate price run. The reason I have that here is because these highs right in this vicinity here have been taken out with that price run, and we never got a retracement down to 50%, right? If we do not get a retracement down to 50%, to me, the range isn't set. Okay, so you'll notice right off the bat, we did end up getting that retracement deep down into discount. Below 50% would be discount. And specifically, the 62 to 79% range, that to me is our little golden pocket. So I want to look and see if we have any imbalances in that golden pocket that we can, kind of make decisions off of. So here's just one. That's a bullish volume imbalance or a gap higher. Gaps higher, to me, show that there's urgency to move higher. You can backtest this on any chart. When you see gaps to the upside, typically that one's right here. Look what happens when price gets up into that bearish imbalance. Bingo, rejection, right? So from this point, and you also notice this as well. Ready? Boom, retracement into your bearish fair value gap so far. Okay, so at this point, I just want to mark this most recent one right here. Here is our bullish volume imbalance, or a fair value gap, I'm sorry, bullish fair value gap right here, and currently inside of this imbalance. If we're to lose this imbalance, to me, 66 is no brainer. We have a bullish order block here, so down close candle followed by an up close that takes out previous high, and to me, if we were to lose this imbalance here, then it's pretty much curtains for this name. Really, we have another imbalance here that was already filled. Ready? See, look where that bounce came from. And let's see, and that's all. Yeah. So believe it or not, I know Crocs are really popular with people, but this chart does not look good in my opinion. This has really got to hold up. If this does not hold up, then it's toast, in my opinion. So that would be Crocs. Let me just mark down the times on that. So that was what, about 5 minutes that I took on it. I just want to be accurate. Let's see. This is, we'll say like 17 minutes, and that makes sense. All right. All right. So Crocs, you got it. All right. Now let's go on to the next one. We have Neo for sure. So Neo is a good one from a couple weeks ago, and you're going to notice when I pull up this chart, it says something on it that triggers me, and I'll explain why I wrote that anyways. But what's going on, Fatih? Thanks for joining. And yep, we can do MU. Yeah, we'll do Neo then MU. Sweet coon. All right. So let's go on over to Neo. So check this. So Neo, you're gonna notice that on there I wrote really wish this low or something like that. Really wish this low was swept. It'll pop up here in a second, but there's a reason for why I said that, and I'll explain why in a second. But we're loading up here. Here we go. Yeah, there it is. Wish it swept this low. That's what I wrote, and I'll explain to you why. So with that low not being swept, you'll notice that this point here, as well as these two lows right here, these are relative equal lows. Typically, when you have relative equal lows on your chart, price is going to want to retrace back down. So what are relative equal lows? Well, a lot of people would mistake this for what would be like a double bottom or something like that. I think it's dangerous if you don't really know, like a textbook, data backed definition of something, but the double bottom, double top thing can be dangerous if you don't really know what criteria needs to be met in order for it to actually work, right? So if you have relative equal lows, and what I mean by that is you have your low set, but your next set of lows or that next low on that double bottom doesn't actually go below the previous low, that's dangerous. That's relative equal lows. And what we would imply with relative equal lows, think about it with hindsight, of course, but let's use logic. If price bounced from that point right there, what had to have happened at this point right here, right? Whoever went long at this point, right? They had to have gone long. These orders are protected here because if price were to go below that 7, we can use the logistical idea that those stops are probably going to get swept, and if those stops are swept, it's taking whoever out of that trade, whoever placed enough money to send this thing right off the bat from that initial $7 pump to 16, right? Um, so for price to get here and not actually take out that low, it doesn't sweep liquidity, sweep stop orders in order to generate enough liquidity to actually make a sustainable, strong move higher. So I hate that, right? I hate when there's relative equal lows left over. I would much rather see price, even if it's one tick, just take out that low and then start to make its move higher. And then I would have felt great about this move up to at least 1160, which is about 50% of the current range. So the fact that it didn't do that, I was annoyed with myself because I think I tweeted it around this point here, and I was upset. And again, you can back test this. Go at MandoTrading money sign NIO. You could take a look at it yourself. But I wrote like I really wanted to sweep 7 and take off, right? And it didn't sweep 7. It started to take off. So I missed out on what, a $2.50 move, but I don't hate it all that much just because it really doesn't meet the criteria for my own personal trading methods. I would I would definitely take a look at it if it swept 7, but we still have this bullish volume imbalance here, this bullish volume imbalance here. This one's untouched as of yet, so we'll see. Really, me personally, just would not have any interest unless 7 is swept, and who knows if that even happens at this point. But this is currently what I have. If we don't end up getting that 7, uh, you know, hold or sweep, I should say, 1160 is 50%. That would set the range. This is currently a bearish range, but that would set our bearish range. The perspective I'm looking at it from is just like we looked at before with a lot of the other names that we went through when I said, if we don't get that 50% retracement, to me, the range isn't set yet. And this is a perfect example of that, right? While we have created 2 imbalances to the upside, do I really know this is the low that's going to stick and hold? Not necessarily, right? You can make that, I guess you could say educated guess with obviously you have some sort of data to back your analysis, but just not one I'd feel as comfortable with. If we were in this exact same situation with that low being swept, I'd feel great about this. But the fact that it didn't, I'm just iffy, right? And it's all the matter of, I think it's 1 cent. So this low is at $7. Let's come on over here to this. Yeah, 701, and then you have 703, right? So to me, whoever went long at this point, going long again here. So what does that mean? To me, that's double, triple the amount of liquidity resting below that 7 strike. And as myself, anybody else who uses these methods know, the market is driven by liquidity, aka money, and the market is in a constant search for said liquidity. And if the market is in search for said liquidity, we can look for it to take out these pools of liquidity that can actually, generate some pretty substantial moves to the next whatever imbalance or location. So, again, Neo just a little, what's it called? Uh, on the cusp, I guess you could say. I don't feel all that great about it, but um, you know it's just me. It just doesn't meet the criteria for my own stuff. So, okay. So let's take a look at, well, and thanks for shooting that one out, Joe. That's a good one. MU. So let's go on over to MU. Take a look. MU had earnings a couple weeks ago. I made a nice move. And let's see, what time are we at? I got to make sure I don't forget to do these little timestamps. It's just easier for everybody who's watching. Um, Anybody else? Yeah, I can do Blink too. I can do TSCO for sure. Upstart, yep, we can do Roblox for sure. Baidu XLE, you got it. Okay, cool. So let's go on over to and for everybody who's watching right now, is the size of the screen okay? I think I can make it even smaller if I do something like this. I think that's even better. Let me see if I could just completely. Yeah, there we go. That's even better. That way you have the full screen. All right, cool. All right, so let's do MU here. So with Micron, okay. So most recent high that was taken out was this high right here. What was the price run to do it from this low to that high? So I would map that right here with my fib. Boom, boom. Okay, great. Now, one thing that we should note with MU, like a lot of these other names, ready, check this. Ready? We took out these lows with that move right there. So let's just check market structure. Bingo, retracement into our discount bearish imbalance. Mando model complete on the take of the lows. Okay, there we obviously continue lower for a one standard deviation move to the downside. But yeah, so let's look at this most recent price run here. So we've noted that we do have two bearish imbalances right here on MU, but let's zoom in and look at this most immediate run here. So we have yet to retrace to 50% of the range. We don't have a bearish or a bullish imbalance until we reach down here at 78.61. Now, because it is a weekly chart and we do have Friday, so tomorrow, if price were to retrace back up and close inside that bullish imbalance right there, so from wick, body, wick, and here's obviously the gap down is not too promising, but if we were to close inside this bullish imbalance, I wouldn't totally hate it yet, even if it were just to pop into here before retracing deeper. But that's just the one thing that I'd be watching going into tomorrow. Overall, just not. You're going to hear me say this a lot if we continuously go through a lot of charts, but there are a lot of charts that are kind of just in no man's land. And realistically, these are them. I would prefer it to get down into a discount bullish imbalance. That's just the way I roll. That's my model. So could it bounce from this point? Absolutely. Is it something that I would trade? No. I like them when they get into discount. So for example, like Tesla was deep into discount. That would be a name that I would look towards rather than MU, which although it's strong, it's had been on a great run and everything, but it just hasn't gotten down to discount yet in this most recent price run, and that's just again I try and stay as strict into the model as I can, and that way really it helps with the not only the success rate but just not thinking about YOLOing into anything stupid or anything like that. So before we get back to any more charts, Soul Vibes had just said, do you want a bar close at 50% or sweep? Yeah, so this is a good question. So I don't trade off of Fibonacci. So what I mean by that is I don't use these like fib levels. I don't value those by themselves, right? I need a imbalance inside or below 50%. Sometimes that imbalance is right at 50%. Sometimes those imbalances are deep down here in that 62 to 79% range, right? Realistically, and oftentimes you'll notice that when we start a price run that takes out a high, we typically don't create an imbalance that's too much below 79%. So that's why I don't really look below that 79% all that much. But this is really, the golden pocket. I think a lot of people use that term, but that's really where I'm looking for. But if we were to have a bullish imbalance right at 50%, that's not an area that I would never buy off of. Essentially, I would look for the wick to get into it and then take off from there. And while we're on this, I'll show you guys an example of where we didn't get to 50% and I just missed it, and it happens. But again, to me, being so particular about the specific setup, that just helps me in the long run because I'm not chasing moves. I'm very regimented in terms of where my entry is going to be, where my exit would be, where my take profit would be. Everything is well defined prior to even thinking about entering a trade. So but here's an example. I mean, look, here's my Nvidia chart. Nvidia completed my model, swept higher time frame liquidity in doing so, and now we have a new range set, right? So with this move, and this dates back to November 20th, but we did get a little bit of a retracement on Nvidia. But you'll look at this, see, we never got to 50%, right? So the fact that we didn't get to 50%, to me, I wasn't involved whatsoever. I was still on the fence. Even when we were making these up moves here, I was like, I don't know. It's not as clear of a picture for me because we didn't set any sort of range. Does that mean that we can't go higher? No, that does not mean that we can't go higher. But the thing that I focus on really is not just beautiful setups that you can go back and look 2 weeks ago or 2 weeks later and say, oh, look how perfect this criteria was met. Everything's just beautiful, right? I want them to be in a way that they're actionable in the moment, where I don't even think twice about it, right? Because it's so easy to go back in time and just say, oh, look how perfect Nvidia bounced off of this level, man. That is just absolute. Come on, right? Easy to say that after the fact, but it doesn't line up with the criteria for my actual actionable trade, right? So if it doesn't do that, then why am I going to front about that? Yeah, sick move, Nvidia, sick hold of this level. But guess what? I was not a part of this whatsoever because I was unsure, because we did not set a range. If we set that 50% range, I would have felt great about going long on this. But we didn't. Oh well, it is what it is. You miss them sometimes. But this is just an example where you kind of miss one, but you miss a lot. It's a part of it. But as long as, to me, I'm very particular, and think about it. Even if I wanted to buy off of this level, I'm risking more than half the range to reach these highs, right? To me, it doesn't make all that much sense. Everybody's risk parameters are different, but that's just me. So where that bullish imbalance in discount, so below that 50%, it can vary. It can be right at 50%. It can be below it, down in that golden pocket, 62 to 79. All very possible. When we get them up in premium, or AKA overpaying or chasing, right, where we currently are on Nvidia, right? I would prefer not to long those, and the reason is just look at your downside risk. Hold on, and let me come on back here. Like, your downside risk in terms of this range is way bigger than what your upside potential could be, right? So I try to just avoid those for that reason. But non-farm payroll is typically at 8:30 a.m. Eastern, Matt. So the days leading up to non-farm payroll are typically not the best or most high probability trading days. Um, I learned that the hard way, and it's something that stuck with me, which is good. Um, but all right, so that would be MU, and we did NVIDIA in here as well, so I'll throw that one on. All right, so now we're coming on over. Let's do next up, Soul Vibes. Also, you had Baidu. That's one that I like, and we'll do XLE as well. So let's look at Baidu first. I like Baidu. Or I've liked it, I should say. But let's pop over here. All right, so here's Baidu. We'll look weekly and then daily if you guys want. But so here's something that's interesting. It's going to pop up in a second, a little slower, because this is what's it called? There it is. Okay, good. So we're all loaded up now with Baidu. Very similar to Baba, both falling into that Chinese, recovery type play. But here's our initial range setter from this low to this high. We took out these highs here. We also took out this high, but you'll notice that on this immediate price run, we do not retrace to 50%. So to me, in that specific scenario, we did not set a range. And if we don't set a range, then I got to wait until some sort of range sets. And the range was set at this point for me here. So if we take a look, and again, why would we bounce here? Every move should be justifiable on your chart always. There's your 50%, and this is a scenario, right, that we just talked about. But just below 50%, and you get that run up. But we don't complete my model, right? My model would complete up here at 160.88. We don't even complete it. So that sucks, right? We did run into a bearish imbalance, so we can justify it, but still, that sucks that we did not just take out that high. So we retrace lower, we get up into this point right here. You'll notice, why would we reject there? You have a bearish fair value gap right there. Bang. Okay, so let me just draw that. There it is. Okay, rejection. Continue lower, gap down, right? bearish volume imbalance showing you urgency to move lower, right? Again, bearish fair value or bearish volume imbalance, gap down showing you urgency to go lower. Price retraces up into this bearish volume imbalance. And so far, so good. We're holding on to, let's zoom in, and I will show you the look on the daily too, because it'll be a little bit more clear for you guys who aren't familiar with the breakers. But we're in discount, we're in a bullish imbalance. Currently, you'll notice I have like a little black box here. And let me show you on the daily why I have that. So let's go over here. Oh, whoops. But again, obviously the challenging part about any of this is not so much the direction. A lot of the times it's the time that you're buying on your contract, because theta can kill you. You can be right, but yet still be wrong. So let's just come on over here and I'll show you what I saw before. So ready, here's your first low, high, lower low, right? We didn't break above that high. We need to break above this high in order to create a bullish breaker, right? So obviously, with the way that a lot of these Chinese names look, there's just gaps all over the place. Sucks, right? But this breaker, and let me just change it black so you guys can see a little bit more clearly. Breakers do not form until you take out the high of the breaker candle. Okay, so low, high, lower low. Okay, from this point, don't love those relative equal lows. I'll just put that out there. Ready? Hold on. Ready? Right here. Okay, bingo. Boom. Okay, not ideal. But with the break of that candle, look where we retrace back down to. Bullish breaker holds, takes off. Okay, retraces lower off of this market structure shift bullish, right? Took out this high with what price run? Ready? Low to high, retracement into your discount. Bingo. Bullish imbalance. Is there a bullish imbalance here? Even without the breaker. Let's just remove the breaker for a second. I'll show you. There is a bullish imbalance that lines up with it. Ready? Right there. Bingo. Holds. And so far, so good. So my model would complete on Baidu up at 126.23. Here's the one level we got to beat right there. And that's a bearish fair value gap. So wick, body, wick, you'll notice inside this rectangle area on either side of that down close candle, we do not have wicks. That is what a bearish fair value gap would be, or some sort of imbalance in price, right? In this situation, be a sell side imbalance, buy side inefficiency, right? So it's a one-sided or lopsided area in or range in the chart. So price got up into here, knocked it back down real quick. So this is the level to beat for me to complete my model up to 126. We do have a bullish market structure. I'm not all that concerned. I think that will happen. Now, the hard part, of course, is the timing of it, right? How is that tradable? I've just noticed since I've gotten back into swinging options contract, just buying more time has just been I know it's stupid and corny and cliche, but to me, especially when you're looking at it from a daily perspective, getting much more time is extremely helpful. And so far, all of the swing trades that I've taken since getting back into swing trading options, oftentimes the ones that I get more time on typically end up doing better than the ones that I'm shorter sighted on. That doesn't mean that when I'm scalping on an SPX contract or a Nasdaq contract or something like that, I'm still, I'll still play zero DTs and stuff like that. But if I'm looking at a daily chart, I ain't trading zero DTs off the daily chart, right? This takes time to paint these candles the way that it does. Um, so yeah, and I mean ultimately, and this is a much longer term idea on Baidu, and this is again, this could take the whole damn year, but those relative equal highs at 160.88 are pretty juicy. So there's your high here. There's your second high that does not take out the high of the first. So lots of money resting up above there. So China does get that rebound play that a lot of people are talking about now, like Baidu. So so that's Baidu. XLE was the second one we could take a look at for sure. Yep, and you can keep them coming. I'll smack on there. Yeah, we can look at Google for sure. Patience pays. Yeah. Yeah, I used to hate when people said that. Like, it just sounds so corny and stuff. But I mean, I got to be honest. If you have a higher time frame setup and it's something again that you've been able to back test over time, something that you've proven not only to yourself, just with the work that you put in, that it actually works. Uh, yeah, patience is good. So let's look at XLE. That's our next name. I'm not so sure if I have this one charted yet, but we can look at it anyways. All right, so 42 minutes in, we have XLE. Again, if you got any names, just keep them flowing. I'll start banging these out a little quicker. But so for XLE, or just energy in general, I usually look at CL, which is the crude futures. But yeah, I don't have this charted, but that's all right. All right, so what was the price run that took this high right here? Ooh, what the heck? I don't know what the heck that is. But here's your high right here. Boom. We took out that high with what price run? From that low to that high. So with that being said, this is going to be my range, of course. And this dates all the way back to September of 2022. It's crazy. Okay, so here's your um, current range that I have identified, right? We did get our retracement into discount. Is there a bullish imbalance here? Yep. So here's the first one. This is a bullish volume imbalance or gap higher. Gap higher showing urgency to move higher. And look, we gap higher and look how much higher we end up running, right? There's your first retracement. Why would we bounce here? Well, again, every move is justifiable. Is this a move that I would look to trade off of? No. Reason why I say that is because we did not get into discount, right? So although we did get a bounce, was it a big enough bounce that we would, really look for anything more than just a little bit of a bounce? No, not to take the high to me. So obviously we get a bounce, we reject previous buy side liquidity, and we start to move down, right? So with that, I'm going to remove this. Price dips deeper into discount. Okay, why would we bounce here? Okay, ready. Let's go from wick to wick. That is a bullish fair value gap. Price gets into that bullish fair value gap, 50%. In fact, takes off again. Now we have a bearish order block right here. We have a bearish order block right here. Up close candle followed by a down close candle that closes below the open of the previous. And there's one more rejection for you. I would price bounce here. Look at this bullish volume imbalance right here. So while market structure is still bullish on a much higher time frame, there's your hold, and so far so good. We actually don't have any bullish for or any really bullish levels left here. Ironically, this would be a bullish order block, and so far that's really all we've held up to this point. Not like the most A plus high quality setup to me, but that's kind of where we're at. We have this bearish fair value gap right here. This is this dates back when October, and then one more gap down. So again, nobody really looks at gaps this way, but go back and look on all of these charts. When you see a gap, oftentimes price actually makes a serious move to the downside following it. Right? Check that gap down, bang. Ready? Where's that last gap higher? Hold on. Gap higher, bang, higher, right? Gap up, bang, higher, right? Is there any more that I'm looking at here? Not so much. Yeah, gap up, bang, higher, right? So it's actually interesting when you start looking at gaps that way, to show you some urgency to move in a specific direction. So that's what I got on XLE. Energy trade, I don't know, it's just not really one that I like that much. So let's see. We got a bunch more names. Apple. Yeah, Apple got smoked. Yep, as anticipated. Ready? We'll just do this one really quickly because I just saw it come up. But yeah, the first trade I had was 200% on SPY. Here's Apple. Yeah. So again, come to your own conclusions, of course. But this is what I would like to see on Apple. This big imbalance down. It's no good. Price could get up into here, reject a little bit, and then start to grind its way higher. Something that could definitely happen because this is ugly. But we did get into discount. So this is a bullish breaker as well. Low, high, lower low, swept higher time frame liquidity, took out the high. Now we got into that bullish breaker. So, but that's what I got on Apple. Let's come on over here and we'll keep rolling. Roblox. Let's do Roblox. Okay. So time we're at 47 and a half. Okay. 47 RBLX. I think RBLX is one of the annoying ones, like a lot of these other mid-cap names that were so close but just didn't take out liquidity all just yet. Let's see. Yep. So while Roblox took out buy side here, right? So when you take out a higher time frame, higher low, typically that'll lead to your you know, reversals. Here's your first imbalance, and it's to the downside to start. Is that the end of the world? Not necessarily. You still have relative equal highs here at 47.67, so I don't think it's all that dead yet. But first green candle that starts the price run that takes out this high would go from this low here up to that high. And so far, price has wicked below 50%. Not into a bullish imbalance. We do have a bullish imbalance here, so it'll be interesting to see, really on Roblox, a close above this orange dotted line. That is the CE, or the midpoint of this bullish fair value gap here. I'd want it to close above it to feel good about it. And this level, obviously with that gap down, is bearish, right? Market structure is still bullish on this thing, on this shorter time frame, but obviously if we were to zoom out and look at the overall damage, we're still pretty bearish. But I think when this thing breaks, it will break pretty big. So that's Roblox. Now let's pop on over to the next. We got new comments over here. Let's see. Okay, yeah. What's up, JJ? BCRX. Yeah, we can do that one for sure. Let me just run through a couple more of these. TSCO. Okay, I think we did this one in the last video as well. Let's pop out. Let's go over here and let's do TSCO. I think KD liked this one. Is Tractor Supply. Here it is. All right, let's pull this one up. Okay, here we go. Beautifully done. All right, Tractor Supply. We did levels on this, so we should have them. Tick, 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 tick. There it is. Beautiful. Yeah, this one's pretty solid. From low to high. There's your retracement down into discount. There is your bullish imbalance that we bounced from, and so far so good. To me, I know it might sound crazy, but the draw on liquidity to me is 230.79. We do have some bullish imbalance down below, but this is a bullish fair value gap right here that we wicked into, and so far the weekly's holding up above. That's really where I'd want it to hold above. I think if you get a move below this low right here at 208, I think you can come to this imbalance here at 205 for another chance, but 230.79 is not all that bad. This is the last challenge or test for it to complete my model up here at 251.17. So yeah, I mean, Tractor Supply, one that I've never looked at before. Two people have brought it up in the last week, and yeah, it looks solid. But yeah, totally bullish market structure up to this point. I'm just looking. We don't have any bearish imbalances up here either. So actually, just to be fair, we do have this one that we've completely filled, but it's all filled. We actually closed above it too, just never separated. So the fact that we never separated is tough, but we have Tractor Supplies right here. So let me just run over. And so that one was at about, we'll say that was like 40, 49. I'm just trying to generalize so that timestamps people can go back and look at names that they want to see. Upstart. Okay, let's do Upstart. Still like Upstart, but obviously it's getting its butt kicked over the last week. A lot of names just got smoked, but a lot of things haven't structurally broken down yet. That's one thing that's at least worth noting on my end. Um, Here's Upstart. So let me just zoom in. These levels will pop in a second here. I'm not even going to start to, they're going to come up. Oh, I can't wait for this new computer. It's going to be so nice. Okay, so here's Upstart. So on our overall range, bullish range, retracement into our discount of that bullish range, we get our pop. Where do we reject? Off of the midpoint of this bearish imbalance right here. So you have this bullish imbalance. I don't even have it marked right here. Ready? Bingo. Right there. And that's currently where price closed at. Boom. Okay. And these, we'll just remove them just for now. But if we also look at our most recent price swing, again, the market is very fractal. And what I mean by fractal is you got to break it down into different segments. And this is why a lot of the gurus who say crazy things, they get away with it a lot of the time because, they might not be right immediately, but if they go back, and they say, oh, tomorrow's or SPY's going to 300, right? And they'll go back 6 months until they can find the tweet that says that, oh, look, I called it, but late as usual. But if you look at this specific price run, right? We took out multiple sets of highs with that price run here. Here's your discount retracement. So far, so good. This is also an imbalance that has not been tested yet, but realistically, until that low is taken, this looks all right. So this imbalance would be one to watch for tomorrow for sure. But yeah, there's Upstart. Let me pop on over. That was 51, we'll say Upstart. Okay, and now what's our next name that we're gonna do? Next we have Blink. Let's do Blink. Yeah, you got it on Neo, no problem. Let's do BLNK. Somebody actually just sent me this one the other day. Let's come on over here. One sec. All right. Now, Blink B. Okay. So I got everything but the actual computer. So I got a new monitor. I got a keyboard. I actually got to get speakers too. If anybody's got some good speakers, let me know. I'm going to need those. So here's Blink. Obviously, we're looking at a weekly, and this name has been decimated. I think I have this one charted, so let's give it a second to boot up here. But these are relative equal lows, right? So I'd expect that to happen. So relative equal lows you have at 277. Actually, yeah, there it is. I knew it. All right, so in this scenario, I would personally, let me just zoom in a little more. Okay, on Blink, again, you have those relative equal lows. Let's confirm. Low 276, low 276, yeah. I would personally like to see a sweep of that 276, and then from there, make its way higher. Let me exit that for just 1 second because I want to show you that not only is there a fair value gap, but you also have a bullish volume imbalance that we bounced from initially, did not completely fill. So again, let me zoom in a little bit more. There's that. Okay, so you notice where did we bounce on that? Right at the midpoint of that bullish volume imbalance. But also just worth noting, we also have this. Come on, man. There it is. Okay, bing, bing. Okay, so that's just a bullish fair value gap right there. So yeah, a sweep of those relative equal lows, and just really wouldn't want it to close below really, or I'm sorry, an all-out stop in this scenario would be 242, but for me at least, and um, any disconnect from that level, even if it's slow motion, I would I wouldn't want it. So risk reward not terribly bad, but just on the way back up, you have this bearish volume imbalance right here to look out for. And otherwise, yeah. So we didn't sweep highs here either. So yeah, not all that bad. Um, that's what I have on Blink. So let's come back over here. Let's see what we're cooking with. Raj. Oh, Raj, you were talking about the screen. Good. I'm glad that was better. All right, Google. Let's see Google. All right, so Google's at 57. All right, let's do it. Da, 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 da. Weekly. There it is. All right, so okay, Google. All right, so one thing that's worth noting on Google was my model was completed. I think it was 2 weeks ago. Yeah, with that move here when we took out these highs. Okay, you'll notice here that we have this bullish fair value gap. So wick, body, wick. You'll notice on either side of this candle in this range right here, you do not have any wicks, so price has not been contested in this region just yet. Q this weekly candle right here. The levels will load up in a second. It usually, once we get to an hour on these streams, it slows down. So when I have the new computer, it'll be great. Haha. Now check that. Okay. So look where we closed so far, right at 50%. Of course, we have tomorrow, but it'll be very interesting to see if we get a bounce back from the midpoint of this imbalance right here. Now, because my model was complete from this low, what was the low that started this price run? From low to high, retracement into your discount bullish imbalance, boom, boom. There's my model completion at 141. Now it's slided over. Okay, what was the discount right there? Okay, bingo, and bang. Oh, I'm sorry. So even with this little hump move here, we didn't take out any highs. So what was the move that took out this high right here? Realistically, it should be there. Okay, that was the first green candle on the price run to take out the highs. So with that being said, we have not yet got to 50%. Does that necessarily mean that we have to? Not necessarily. Just for me personally, I would like it to get to here. It is pretty ironic how it's lining up perfectly with this CE or midpoint at this point. But ultimately, you have relative equal highs here at 143.69 as well. If we zoom back out, I think you'll see that. Yep. See right here. So I think that's still the draw on liquidity. Now it's just a matter of, does it come into discount or does it take off without us? That would be the question. And unfortunately, I do not have the answer. And realistically, the way I look at this is I'm just not interested unless it gets into discount. If it goes without me, so be it. Right? It happens. You saw what happened on Nvidia. It didn't get to 50% and ripped 40 points. So it doesn't necessarily need to. Just for me personally, I like when the range gets set. BAC paid nice today. Nice. Yeah, the financial names are strong. Let's see. Let's see. Okay, so let's do J-Bone. J-Bone has BCRX. All right, I definitely don't have this one charted, but we can look anyways. BCRX. All right. Sorry, I'm just writing these down as well. Okay. Yep, no problem, Raj. Thanks for joining, dude. Yeah, we can look at Zoom. Do you short the range? Okay, I'll get to this. That's a good question there, Soul. But let's just do this one first, and then I'll get to that question because that's a good one. BRCX, or oh, I'm sorry, BCRX, right? Yeah, BCRX. BioCris Pharmaceuticals. Please don't be a penny stock. If it's a penny, I try to avoid it. I know Blink was a penny too, but I avoid those. Oh, okay, cool. All right, so with this name here, let me look at the first thing. Holy, yeah, okay. Okay. Let's just see. Um, I'm looking at it from two perspectives right now, and I'm trying to figure out which one makes more sense. So that would be our buy side. Uh, Sell side really is here with a low that was not yet taken. Now, just interesting. Let's do this here. Boom, boom. Okay, so that's a bullish fair value gap. Let me just change the color of this real quick. Okay, good. Now here's another. So you have the bullish fair value gap here, right? No wicks on either side of this candle, but you also have a volume imbalance. So the way I do it, just to try to eliminate all the stuff on my chart, is just that. Um, so now, with that being said, we can look at it from a very large range, I guess you could say time horizon type move. But here would be, okay, what was the start of the price run that took out the highs? And you can continuously move higher. No 50% retracement, range ain't set. No 50% retracement, range ain't set. No 50% retracement. Nope. Nope. Boom, there it is. Okay. So the fact that we retraced here and took out that high, at that point, what do I do next? I go from low to high. Okay. And that just sets my market structure. Okay. So from this point here, you'll notice dead, right? Uh, oh, well, Mando, your model didn't work. If my model was to work every single time, price would only go in one direction, right? That's just the way it's structured. High, retracement, next high, right? So when we take a higher time frame liquidity, typically that is a decent enough time to look for a reversal, specifically when we don't have any imbalances. There's not one imbalance. Let's zoom in here and I'll show you. There are no imbalances in this entire move here, right? Except up in premium. And that one held for a second, but so we have bearish market structure. Okay. Now, if we look from here, what was the start of the move that took out that low from there to there, right? Bingo. Here is your retracement into your discount. Bearish imbalance. Ready? Oh, look at that golden pocket. That's beautiful. Bingo. Mando model complete at 7. So that's from $15 to $7. At this point, that would be the new range, or however you want to consider it, right? We're still bearish. Now, what was the start of the move that sent us to that low from here to here? Okay, at 50%, do we have any bearish imbalances? We actually do. The only thing that's thrown me for a loop here, and why I won't say that I think we can retrace on this name, is because, hold on, let me get this. This is kind of sloppy, but sorry in advance. There's your little bounce dump. While this volume imbalance here is not, it's not at 50% yet. So while it's here, I'm not necessarily so sure that would be the block, but that doesn't seem too bad. I wish it would have taken out some form of higher time frame liquidity, which I don't believe it did. No, not really. But yeah, I mean, at least you could justify this bounce here with that bullish imbalance. So yeah, is the range set? I'm not all that sure. No imbalance is formed down here just yet. Let's just see if there's any sneaky volume imbalance or gap higher that we can look for in this. Ooh, little one. Okay, so that's what I mean. Sometimes you gotta crunch your eyes to see it. There it is. Okay, that's a bullish volume imbalance. Yeah, it ain't bad. So you have this bearish imbalance right here. Ready? So I'm going to do this. Look, that's a volume imbalance on top of a bearish fair value gap. So that's a level that you got to beat right there. And from that point, you get another one here. This one's actually already been filled. So not all that bad. You got 2 levels to beat for that 50% retracement at $10. So I think. Am I totally convinced this is a low? Not necessarily, but yeah, so that's what I got on this one. I wish it would have taken some sort of higher time frame low. If it did that, I would have felt much better about much better about it, but really didn't take out any low. Um, so that's what I got on this one. J Bone. All right, what do we got next? Let's keep on pumping. Let me just see if there's any questions. Played it a few times during COVID. Oh, cool, Katie. Yeah, Katie's a biotech guy. JJ. Yep, knows better than me. I don't know anything about this company at all. Not that it really matters, but um, okay. So next up, well, yeah, we could do Zoom for sure. So let's do Zoom. But before that, we have a good question here by Soul Vibes. So, Soul Vibes, your question was, do you short the range down to discount? And this is something that I'd started doing, I would say, I think I started it probably around September. So, in the past, since I really started using this model, which came into play last year, early last year, probably around this time, but I never did. I would always just wait for it to retrace into discount, and then I would play that move, right? But because I didn't know, like for example, like we're looking at this BRCX, right? We're looking at this BRCX, and the thing is, like, do I know the range is set here? I don't. I don't really know the range is set until we get a 50% retracement. That's just the way I think, right? So what would be a distinguishing factor that could tell you that actually the range is set here? And if I think from this point, price is going to go to at least 50%, that's discount. Why would I not look to play that, right? So, yes, in short, in a bullish structure, I need to see some sort of imbalance to the downside before looking for that discount retracement. So, for example, I know we're going off topic a little bit here, but I think this is helpful for, this is almost part two of my model. So, if we were to come here and look at NASDAQ again, um, obviously this one was a one shot thing, but I'm also not so sure. Um, not so sure about this one. Obviously, we didn't get to 50%, but we haven't created this imbalance down just yet, right? But if next week we don't recover, like I think we can, then I would consider it. So, for example, here's on the daily. We'll look at it from the daily perspective because this is one that it just proof is in the pudding. Um, so again, we have our bullish range daily. Okay, look what happened after we formed our first bearish imbalance on the daily. Bloop. And I have been looking bearish over the last couple of days. But that was, to me, what would tell me that it was actually bearish, and that was it. First imbalance to the downside. That tells me that okay, we're going to be looking at a range setter here. And again, even if I'm wrong from this point, like what can you do? Uh, Entry and stop out above that bearish imbalance, right? So your risk isn't all that crazy as a result of that. Again, that's the biggest thing for me. As long as I take care of my losses and my losses don't get out of control and I don't keep holding on to them because, oh, I have another level here, I have another level here, right? So, for example, like, I didn't do this, but if you were going to, for me, I would long the 50% or the high of the bullish for value gap. And we get down to this point here, I'm probably looking to cut it at this point because then what? Oh, I got another level here. I might just wait for that level. Oh, well, if it goes below here, then I got this. No, I can't play that game because you get smoked that way. And I ain't getting caught in quicksand, kept getting dragged under lower and lower and lower. It can't happen, right? It used to happen to me all the time. I would have crazy wins and I'd have crazy bad losses. But using these ideas and these concepts, it's really helped me to refine how bad I'm actually losing. Like, if I'm going to lose, that's fine. I'm okay with taking a loss. I can fully accept that. But as long as I don't let that thing get out of control, it's all good. I can stop out 4 times in one win, take care of all those 4 stop outs, right? That's the way I look at it. And I'd much rather do that. So, but anyways, let's get back to Zoom. Sorry, that was a little bit of a tangent, but that's a really good question there. So, because I haven't made a video on that part yet because I really haven't. For a while I was back testing it myself and just trying to figure out like what was the what can I really use to help me in that situation to again, do I know that's the range low? I don't know for certain until some sort of imbalance is formed, and I feel much better about it. And it also gives me some guidelines for my trade. Where's my entry? Where's my stop out? Where would I look to take profit? Right? Okay, so just looking at Zoom from afar right now, I don't really love it all that much. Here's this. You have a bullish volume imbalance right here. That's a gap up, right? Gap up. What is that? Some shows you some urgency to move higher, and we moved from 64 up to 74 in that price run. But here's your imbalance. So we didn't take out our quote unquote swing high in this particular situation, but we did take out a high. This is the bullish perspective on it. Again, I'm not really all that, I'm not feeling all that great about this name. Uh, 64, it's small in terms of what like the possible risk reward could be. You're really risking like 41 cents for what, $10? That ain't bad, but I wouldn't want it up here. Just specifically looking on the weekly. Let's just look at the daily. Just I'm curious, but we have no weekly imbalance here. Let's look at the daily. Okay. Oh, we do. Hmm. Well, that's annoying. That throws a wrench in it. So if we look at the daily here, you have your bullish, you have a fair value gap, and you also have a bullish volume imbalance here. So let's just zoom in here on this. Okay, right here. Boom, boom. Okay, not all that bad. So you look at it from this perspective too. You're right at 50% of this bullish imbalance right here. Um, that could be when you're looking at. Now, another thing that you can note is you have a high, low, higher high, right? That's a bearish breaker. So let's mark that at the very minimum. Ready? So this would be our breaker candle, that low. Okay, price broke through it. Even if we were to bounce, we could get up in that bearish breaker and kind of go lower from that point too. So maybe like something like this. Hold on, ready? Boom, into the breaker, back down. Oh, whoops. I just try and forecast things, like look ahead. There's your higher time frame liquidity sweep right here, bingo. And then maybe from there, you go up and complete the model. Might just take forever, but maybe something like that. Also, there is by crunching down on the daily, we could also look at it like, okay, we took out these lows here with that price run. And then from there, look for a retracement into discount and look for the next low. So not as clear. Don't really love Zoom all that much. There's some that just hit you and you're just like, oh wow, that's straight. That's easy. Chris, ON. Yeah, we could look at that one for sure. Okay, so that was Zoom. ZM. Now let's look at ON, and let me just see. We got. Don't you think we need a very heavy turnarounds to close these gap down bearish imbalances are forming this week? Yeah, it could happen, but if market structure is still bullish, it doesn't have to happen like tomorrow. Tomorrow could be a start, but it doesn't have to all happen in one day. We could do PayPal also. Oh, thanks, Seeker, for popping in, man. You got it. LLY, yeah, we could do that. Yeah, we did Apple briefly. G, if you want to pop in, I'll tell you exactly what time we looked at Apple. We looked at Apple at the 46-minute mark. Yeah, we can look at ES as well. So we got a couple more, and then I'll call it quits. But let's do ON. I definitely don't have this one charted. And let me just go back to the weekly because cleanest charts always. Monthly would be cleaner, but and something that would be a little bit more actionable. Let's look at this. Okay. I'd tell you right off the bat, right here. Turtle soup? Question mark. So with turtle soup would be a higher time frame liquidity sweep, still within this bullish imbalance here, and then from there maybe look at the highs. But ready? No retracement of 50%. There's your 50% retracement. There's my model complete. Okay, the fact that my model completed there. Let's keep on moving it here, and let's go from this high to that low. That's a failed Mando model fail, right? It happens. There's your higher time frame liquidity sweep, right? So you can use that when you say, okay, we swept higher time frame liquidity. At this point, I don't know how I feel about that, right? So what was the move that took out this low right here? From here down. Nope, we didn't take out the low yet. Bingo. Okay, here's your retracement to your bearish imbalance right here. Bang. Okay, so far so good. I think it's going to 23.41. That would complete my model. Would fill the rest of this bullish imbalance. So it's a big one, so just bear with me. It's going to look sloppy, but there you go. We didn't take out higher time frame liquidity to the downside yet. If we were to sweep that low, maybe. But in the meantime, yeah, I think it'll complete the model at 23.41. Ooh, hold the phone here. Okay, so you have a low, high, lower low, a break of the high, bullish breaker, cough, cough. Huh, ain't that something? Right there, bounced. It's crazy. You know, the only downfall in that situation was you had a bearish market structure shift with that low getting taken out. So, yeah, I think it's likely that it'll take that out. But then you're still within the breaker. So at that point, flip a coin. Your breaker could be used as the guide on that, I guess you could say. So yeah, so that's what I got on ON. Let's go 119. We'll go to PayPal. And I like when you guys just say it without like any oh, I'm bullish on this. Like it's interesting to see if it lines up with what you're thinking or whatever. But okay, so let's go to PayPal. This dumpster fire. Let's see. All right. Ugh. This thing can't get out of its own way. I'm zooming out. Reason why I'm zooming out, I want to see if any higher time frame low is taken out that would justify some sort of move up. I think I've charted this one in the past. This looks like big FU middle finger candle. I definitely have this charted. I don't know why it's not popping over here. Yeah, there it is. Okay, good. Yeah, so this is what I got on PayPal. Okay, see, just for reference, see it, those green lines right there. You'll notice when we zoom in, they become rectangles, right? So check that. Bingo. Retracement up into 50%. Here's your bearish imbalance. Bing. Okay, there it is. So far, so good. Yeah, I think PayPal's toast. So here's a situation where did we get to 50%? Yeah. Was there a bearish imbalance here? Not quite. Did we hold on to this bearish imbalance throughout? Yeah, we did. So, yeah, PayPal's trash. I don't like this at all. I think it would go to 50. I know a lot of people are bullish on it, but realistically, if we were to take out that 65, you get a short-term market structure shift, and you'd be pretty bullish. I mean, look, if tomorrow is crazy, which it could be because we have that non-farm payroll, but if you get a crazy move to the upside tomorrow, you never know. Could save itself, hold on to previous bearish as bullish. So that's really the level 59, 57. But at the moment, looks pretty bad. So I hate PayPal. But do you think Bitcoin miner ticker's done or rally continues this month? Andre, we'll get into this one in a second, but for whatever reason, Mara looks like a million times better than, say, Riot. That Riot does not look nearly as good as what Mara does for whatever reason. And I wish I could tell you, but um, you know, hold on one sec. Let me just answer this text. Um, uh, all right, let's see what else we got. Yeah, I could do SDGR. Yeah, I'm gonna start running through these quick. Okay, Fatih, can you check the very, very small bullish amounts on NQ daily from 450 to 453 and check on 4 hour time frame how we respected over the past 4 to 5 candles? Seems very interesting to me. What do you think? Yeah, so we did NASDAQ first, but that's yeah. I'm looking at this previous buy side liquidity. So for people who don't use this method, you'd look at that as a previous resistance turned support, question mark, question mark. So we'll see how it goes tomorrow, but we'll see. All right, let's keep going. Layla has for LLY. We actually did this one the other day, so I have it done. Okay. Let's see. Let's say it's 123 LLY. Okay. Yeah. Oh, did we do it? Yeah, we did it. Dang, we said this on the last live we did. When was it? Yeah, I think it was last week. Yep, bingo. So let's take a look. Ready? It'll load actually. I think I have a chart. Maybe I don't. I thought I did. Whatever. Okay, what was the run that took out these highs? Ready? Low to high. Retracement into your discount. Bullish imbalance. Mando model complete. 629.97. So, with that being said, what was the price run that took that out? So, I say this a lot, but really only when it applies, and it applies here. Anytime we're at all-time highs or all-time lows, I'm pretty useless. And what I mean by that is I don't like trade off of standard deviation extensions or anything like that. I really need information to the left. So I'm a little useless, but it did complete my model, so that was pretty cool. I don't know if we did that one on Tuesday when we were in the group or the last call, but okay, so let's go to ES. I'm just going to start rattling them off a little quicker. Oh, crap. This is going to be that energy, whatever. I got to actually click the thing. Sorry. Come on, don't fail me now. We got a couple more names left. Come on. There we go. Thank you for listening. All right, so ready? Here is ES. Okay. Yeah, see, anytime you type in ES straight up, it just comes up Eversource Energy. Let's see. What do we got? Oh, I got you on that AONON, right? Okay. All right. So here's what I have on ES. So very similar to NASDAQ, where you have that previous buy side. And this is a little bit lower. We have not taken out that high here either. And you'll notice that it's almost as if NASDAQ is like one leg higher than what ES has been. And that really was the reason why I pivoted to trading NASDAQ much more than ES last year. I always felt like it was the leader. But here's my model: low to high, retracement to discount, take out the high. So now we're getting that retracement here into previous buy side liquidity. It'll be interesting to see. I thought this was the drawn liquidity. I still do. So if we're to bounce from this point, take out that high, that would be ideal for me in this situation. But really, if you were just to look at Nasdaq's literally just in this like little bracket where, yes, it's still pretty far from the highs, but it doesn't have any more uh, layers of buy side above except for that all-time high, whereas SPY has this and that. So just something to note. So that's what I got there. The miners, I think tomorrow they're expecting that ETF to launch. But here, I'll just show you quickly what I mean. So here's Mara. And what time was that? Let's say it's like, 25, 124. We'll say it was ES, and then we'll go 128. We'll go Mara. Okay. So with Mara, I wish I got another chance, similarly to Nasdaq, with the retracement back to previous buy side. That right here. Here's my tweet from when I nailed Mara at 7. But I have sold most of my shares. I didn't trade options or anything on it, but if you go back, just do at @MandoTrading, money sign Mara, you'll see that this is tweeted on October 26th, and the progress throughout. But yeah, it didn't get to 50%. So if we were to take off higher here, that would stink. But I think 32.74 is still the draw here. But on the flip side of that, check this. Riot looks so bad in comparison to Mara. So just keep a mental image of Mara, of course. And if we look at Riot, check this. So Mara did not take out this swing low. Riot has. Mara's already taken out buy side liquidity. Riot has not. Right? Riot is still. It rattled up against this previous. Oh, I have it charted. Whoops. It rattled up against that previous bearish order block and bearish volume imbalance right here. That gap down. See, price got up into it and rejected so far. Got down into this bullish imbalance. Didn't quite get to 50%. So I mean it. To me, Riot just looks much more bearish than Mara, which is pretty interesting to see. I mean, even look at Bitcoin. So I was a little wrong on Bitcoin, actually. I thought Bitcoin was going to move lower first to start this week, or this maybe 2 weeks ago. I think it might have been 2 weeks ago. And then from there, continue higher. But it didn't, obviously. It stayed high. But I'm also, I mean, there's no, what are we doing? I don't care about market cap. Give me the dang ticker. What are we doing? Hold up, let me zoom this. I got it saved over here. Bitcoin. Okay. It's coming. But yeah, I want to see what happens here. Look, whether it comes here and we respect the daily discount level, or we retrace more, and this is on pretty much most names at least, or retrace into the discount of the weekly, which would be deeper, which I really wouldn't like right now, but possible. But yeah, so here's Bitcoin still rattling around, and this is where I wanted it to start to head lower, and obviously we've gone higher since, but we're still within that same bearish imbalance. I have it on the chart, but we're just waiting for it to load, of course, because this computer takes 10 years to do anything. But there it is. Like this imbalance here, I'm actually going to remove this one. The reason why I'm removing it is because we've already filled it just for now. But this is the one that, yeah, we merely got into it, but we're still just rattling around. Very indecisive. And I think with tomorrow, obviously, we'll see. overall on this price run, I do have Bitcoin being bearish. But if you want to see something pretty crazy, and again, this is just my own. Everything that I say is just what my own thought process. It doesn't mean I'm going to be right or wrong. Trust me, I've been wrong before. I'll be wrong again. So to me, the best thing you can do is just learn how to do this stuff. And it's nice to have other people you could talk to about and all that good stuff. But so now look, right? Well, yes, from the high to the low of this most recent price run we have is bearish. But check this, okay? What do we have right here? That's a bullish imbalance from Wick. Come on, give it to me. Give me the box. Give me the box. Pause. Okay, there you go. Boom. Boom. There it is. Okay, so what was the price run that took out this high? Ready? Okay, bingo. Just do it. What are we doing? We're really slowing up here, folks. Fib. See it? Low, high, retracement into discount. Mando model would complete at 69 bands. Right there. So that's interesting to look at too. That's from a yearly perspective, of course, but just interesting when you can look at something with a different perspective, I guess, using different time frames to kind of frame your thesis. Oh, cool, man. Yeah, no, I'm glad you're Soul Vibes. You're always in here, man. I appreciate it. Uh, so Mara's my biggest W this month so far. Yeah, Mara's been that was awesome. Fatih, we already did LOY. Oh, you said does it ever stop rising? Yeah, no, Lily's been a beast. But okay, let's do Siva. We can do Amazon too. Katie, I'm just looking at your comment here. Think we did it Wednesday because I drop home. I'm not. On LLY. Yeah, we did. I remember. I remember we talked about that one. I think we did it this week though. All right, so let's do Schrodinger, and then I'll probably call it quits. But yeah, let's pop this. Hold on, last one. SDGR, right? Again, this is one that turned out to, it didn't. Not one that's really on my radar at all. Not one that I look at typically, but Katie had brought it up and looked pretty good. But I think tomorrow morning it'll be very telling. Unfortunately, a lot of the stuff that we talked about tonight could very well be washed with tomorrow. If tomorrow were to really structurally change things, that's not great. I still don't think that's going to happen, but of course, we'll see. I've been wrong. Okay, so here's Schrodinger. Yeah, so not much has changed just yet. One thing is, there's not many imbalances on this move higher here. So, of course, we're looking at a much larger range here. But even this imbalance here, we closed above it. I'm sure if we look at the daily, we can figure out. Again, every move should be justified. I know that's a bearish order block on the weekly, but let's see if we got anything specific that we can hammer home as to why. Yeah. Okay. So ready? What do we see here? We see a little bit of this higher time frame sweep. We also see, oops, okay, to the tick. Rejected that bearish imbalance again. But this is a bearish order block. So you would use that green candle. You could put a rectangle around that, and that lines up with that right there. Yeah, so KD, I mean, if you're like, I know you've probably been in this for a while. but very similar to a lot of the names actually that I've been looking at. Like they do line up here where it's like, okay, like, at this point, like my gains have kind of, I've given back a couple bucks, but I've been in so early. Like Tesla is an example, actually. So I rolled Tesla, and since I rolled Tesla, we're like down quite a bit. Obviously, the first trade that I made was real good on it, but um, now it's like we have that current gap, or that 79% of that most recent price run, and from that point, now I'm like, okay, if we're to lose that, then I'm good. Um, but yeah, no, it's still all right. Still following that weekly plan. Um, it's just, again, I like to look at the weekly because I think it does give a much greater or larger horizon in terms of like what your overall buys can be. But sometimes these trades take forever to play out. It doesn't mean, oh, it's going to happen tomorrow. But all right, yeah. So I think that's everything. It's not looking good, so good now. Yeah, no, it doesn't look. Market makers are hacking you so you don't spread the knowledge. Nah, man, everything that I'm talking about here is not anything that I've created. It's all from somebody else. But I've watched like a zillion hours of his videos and stuff over the years. So yeah, sorry, Steve, we can do this. Let me do this. We'll do McDonald's, and then we'll do Amazon. I know you said Amazon. I'm sorry, I forgot to pop on that one. But okay, McDonald's. Okay, check that. Very small. Eesh. A little sloppy, but bearish volume imbalance right here. Okay. I think the verdict is still not in on this name either. You got a lot of bullish imbalances down below, so I still think this is the draw on liquidity. Relative equal highs, right? Yeah, let's just see. High 299.10. 290 now, 299.35, and right here. So you would have this. Bingo. Tomorrow's going to be important. If we make some sort of imbalance candle down, then obviously you would consider one of these bullish imbalances much below. But I don't know. A lot of names I still favor upside. I don't think anything is really broken on any of them yet. But non-farm payroll can absolutely change that. But here is Amazon. Let's just do this one quick. Loading. Yeah, I haven't eaten McDonald's food in a long time. ICG, we could do ICG too. If it's a penny stock, though, I might not have all that much for you. Yeah, this is an ugly candle on Amazon. You do have a bullish breaker here, though. So ready, low, high, lower low, your breaker candle. I'm gonna have levels pop up in a second here, but we're currently in this bullish breaker. Okay, so it lines up with a lot of the other names. Is the daily levels gonna play out, or is it gonna be a weekly? And if it's weekly, it's gonna be much deeper. But yeah, I don't hate this at all. Maybe come down to the midpoint, 142.34, and start to make a move higher. 158 is this swing high right here where I was looking, but we did reject this. Like, oh, we can kind of justify all of that. But on the weekly time frame, it's stretched out, obviously. So this would be a pretty deep retracement if it were to come down here. But oh shoot, ICG. I think it can run to 200, 300 within the month. We just need some Chinese manipulation to push it. Oh, you like the mushroom coffee? Yeah, yeah. No, I've been drinking that nonstop since the summer, man. I don't mess with the other stuff. I mean, there is a little coffee in it, but okay. So let's see ICG because I think you're onto something with those Chinese names. Baidu looks all right. Baba looks all right. K-Web is that ETF. That one looks good too. Let's see. ICG. In Chains Group Limited. I've never even heard of this name. So, let's see. Oh, damn. Okay. Is it like an IPO? You think it can go to 200, 300? Is this the IPO? See, I don't know anything about it. If you have any info and you want to drop it in there, that'd be great. I don't know. I don't even know what kind of company it is, but damn, that would be serious, man. $200 to $300. Um, let's just we'll mark out some of these. I don't know if this is where it IPO'd or I'm just not loading up the rest of the chart. I don't know what's going on here. Um, okay, so let's mark that. That's a bullish imbalance right there. This one right here. Let's see. This is a bullish volume imbalance or gap higher. Again, gap higher showing you urgency to move higher. And then you have another one right here. And last week's candle got into it, left behind relative equal lows. Don't love that all that much, but okay. So what was the price run that took out this high? It was from that low to that high. Ready? Boom, boom. Okay. And you have this bullish imbalance as well. So yeah, you got lots of support cooking down there. So you know, again, like above all-time highs, I'm pretty useless. I need that info to the left to give me something. But we did sweep this. So if there were to be a retracement down into this area, that'd be sweet. But all right, I think that's all I got. So for everybody who stuck around, appreciate it. I needed this tonight. I needed to do something or I was gonna go crazy. So um, yeah, I can do ABT. I'll do ABT real quick. Um, yeah. Oh, you know what? NASCAR all out. You make a good point. The Chinese names they do go berserk. Yeah, Katie, I just saw that. ABT. I'll do this one quick. Um, shoot. All right, we're loading up. Sorry, it's slow. It's usually what happens with this computer. All right. Sorry, it's taking forever. Okay, so Abbott bearish market structure took out that low with that price run. Okay, retracement back up into discount bearish imbalance. I don't think I have this one charted, so but let's just see. Hello, give me this. Jeez. Okay, just for reference, that's the level to beat. Currently above CE or the midpoint. Close above that would be a good sign. And then let's just do our fibs just to line it up. Nope, right there. Okay, so the reason why I have it like that is just because we took out these lows with that price run. If you go to every green candle, you'll notice not one time have we bounced to 50%. This is our first discount retracement. Yeah, so this is actually, I guess, a learning thing and something that I've learned to do. But the way I look at these, like this exact situation here, I know we took out higher time frame liquidity, and that can oftentimes lead to reversal. Like if we were to look over here, I bet you we can find a reason for that bounce, right? Bullish water block right here, down close, followed by an up close. We swept liquidity on that too. So we ran into a bullish water block on the weekly, and so far so good. But we didn't sweep that low, so that leaves me maybe eerie a little bit. But the way I look at this really is just it's either going to be the best short or the quickest stop out of your life, and you can just use this imbalance as your driving force. Again, if you're not okay with taking losses, then obviously not the setup. But to me, the way I look at it is just like, okay, if we're to reject from this point, like where do I think we can likely run towards? And it would be that 89.67. If we come up here and we close above this bearish fair value gap, then I think 115 is your mark. That's your market structure shift. And from there, it's a completely different story. Then I'd be in the bullish frame of mind. But that's just the way. To me, those are the best types of setups. If you have something that is either the best long or short or the quickest stop out, right? Lowest risk, highest reward. That's the way I look at it. Um, so yeah, overall, I mean, let's mess around here before I pop off. Um, let's just see like a monthly, just for or maybe even so the monthly gives us a little more information here. So you'll notice on the monthly, what do? We took out higher time frame liquidity here. Since then, we've taken off. Okay. So I don't think, really, I don't think this is all that high probability of a short. I know it lines up with my model and it meets the criteria and everything like that, and the risk ain't too bad, but um, check that. Jeez, buy side is 115. I need to change the color of that. That should be green. And just for reference, wick retracement 50% takeoff. Dang, yeah, this is a pretty good find. Really good find, actually. So from that COVID low, if you want to just, you know, not bad. Yeah, it's a good find. I take it back. I would not try to fight this, but it would also be one that I'm not going to long, because really the upside at this point ain't all that fantastic. And I think after you take that buy side liquidity, you could retrace back down into one of these bullish imbalances, which would be super ideal. So like, maybe a sweep of 115, retracement, and then take off. Like that would be the most ideal for me. So that relative equal high on buy side. Let me just see. Oh yeah, I see what you're saying. Bingo. Let's close high 115.69. No, this one took it 115.83. So not quite. You do have another little high over here at 118.32, but yeah, so that's all I got. But again, thanks for everybody who popped on, and I might do one over the weekend. So I'll catch you guys then if I do so. Hopefully I'll have this new computer next week and it's a little more smooth. But all right, I'll catch everybody next time.